The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the my opening call is the daily newsletter. This is the Tiger Technicians Hour, 10 o'clock to 11 each market day. We're looking at the Dow down 382 on this Monday, the 9th of May. How many Mondays have we seen such terrible sell-offs? This is at 32,526. It's come back huge from the low of the day. If you look at the YM, which is the Dow futures, the YM went down to 32,236. Now, this is going to be very interesting because the low that was made in the Dow futures, that is the continuous contract, on the 24th of February was 32,065. The day is young. We never can tell. Oh, they can get rid of that. We've been out of that for a long time. Yes, this arch formation. Remember the patterns that I look at? Let me just discuss that for a moment. Patterns that we look at are straight line up or straight line down. Oh, slow today because there must be a lot of action in the market as people start to look at different positions in a much more serious way after the opening bell 40 minutes ago. So I look at straight line up, straight line down, cup formation, arch formation, and then a mix of 1 and 2 or 1 and 3. The H pattern is called the dreaded H because if you take out the left side low, usually after a peak A or a peak B fails, goes to minus. That says you can go quite a bit lower. On the upside, you can see that when you take out the left side on the reverse Y pattern, it's green. So if you take out that left side high, you can go quite a bit higher. Well, here we are. We're looking at this pattern that said the arch formation in the YM has, I didn't draw it here. I drew it in the Dow itself. So let me see if I can just do this right now. INDU. Yes, there it is. So what we did was we were looking at the pattern that I call the big arch formation. I used the, in this particular instance, I used the 372 high that was made back in late March at that peak D. I call that the fulcrum for a first left side, right side price time match, going to the left side low of 32,272. It actually pulled back and then made that cup formation. And I discussed the left side was strong on the around about the 28th of March, but the technicals, when it was on that right side, when it was at about the 24th of April, that was weak, and we've come down very sharply. And there's one A formation failure. Here's another one because it took out this most recent low of 32,449 on the 2nd of May. So far, we've taken it out. Now, there are a couple of things that are going on here that are really important. I look at the market as phases. And as a phase, once there starts to be, it can't be once, if there are trades closing prices below 32,272, what we've done is we've begun a new phase, and we're looking at the monthly chart right here, where for 3 candles we've held above the left side low. If we start to trade underneath it, the daily chart impacts the weekly chart negatively, and the weekly chart, which has very few technicals that are positive. The MACD is very weak. Stochastic is down at 26%. The one positive is that the on-balance volume is getting extremely oversold, and it's the only thing that I look at as oversold, because the stochastic, when it goes into the 97% level, that is fantastic. You want it to hold there. When it pulls back to the 3 or 5% level, that's very weak. If you're short, you want it to stay there. But the actual level that I look at on the on-balance volume is when it goes to major lows, as it went to a major high right there. That was the week of the 5th of November, and the very next week, the Dow made its high of 36,565. I mean, that's the last high, not the all-time high. And and then a pullback very sharply. So as it stands right now, what we're looking at is, and this is something that I took into consideration as I was doing all my homework over the weekend and when I did my overview video for subscribers over the weekend. What I was looking at is there are enough times where we've had the single leg A that goes to the upside, screams higher, rockets in fact, and then tumbles down, but the technicals don't move to the downside as sharply as the price. In this particular instance, yes, the stochastic ran up. I do not like a failure at a previous low when the majority of the technicals are weak. And that was the only thing that concerned me this morning, because I really wanted to. I actually had it all typed up that we were going to go long the diamonds again on any pullback under a certain level. We would have got that. The stop I had would have held. And the only reason why I took it, I blipped it off. Usually I say, once you've done your homework, don't change your thinking. You've done the work. But I say to myself, I don't mind a market rally at this particular point because there'd be so many things to look at the end of the day. I would much rather just step back and give myself a little breathing room to say, hey, these are patterns that every once in a while, when they work extremely well. But when they don't work, you are stuck. And I didn't want to be, we have tight stops of less than 1% or 1%. But I just didn't want to be in that position because it changes your thinking. So I'm stepped back and I've said, okay, what we're looking at here is, and I'll go through this in a moment, but the Richard Arms trend index, short-term trading index, had a high today of, let me just check, 4 point something. And it's had highs, a very high level, almost every day for the last 3 days. Today it went to $4.34. Normally, you're trading in the 1 or 1.50 or something like that, or even in volatile days, you might get to the 1.90 to 2.10 area. So this says to me that there is such a degree of nervousness. I call it the Chapman wave trend gauge. I use it completely differently to Richard Arms. I believe what he does is the advancing declines over the advances over the declines divided by the up volume and down volume. But I don't want to do that. I just use the numbers. And this is a really high number. I had an aberration and nobody said anything. I couldn't track it down anywhere. But there was a high. Oh, did I forget to write? I did type it in. Where did it go? There was a high of 9.81 on the 15th of April. That is beyond the beyond. 9.81. Usually the highs are 4, maybe you get a 5 once in a while, but 9. So that looked to me like it was some kind of an aberrational thing. However, when I see it over a certain level, the chances are very strong that the S&P futures are going to have a 9 to 11 point rally at some point within 2 days. That's going to help the market, help the S&P and the Dow to at least alleviate some selling pressure, or in fact go to much higher highs, daily that is. But we'll see what happens. I'll be back. There's a lot to discuss today, and I'll be back to talk about where the...
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors. Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, I can't remember now if I've done through all the indices. I did it for the update at 10 a.m. Let's just do this now. So the Dow is down 377 at 35,521. I don't like when the stochastic rallies off the under 20% level, goes above, goes to 24, 26%, or even 30%, and the market, instead of rallying, starts to come down, because what it says is now you've got room to go back under 20%. So that makes it very difficult. You can think of it as a positive divergence, but not if it doesn't work immediately. That's number one. Number two is the MACD histogram was doing really nicely on Thursday, not so good on Friday, and now the vertical lines are saying at minus 131 that the MACD for the W formation to form by the end of the day, you've got to see a really nice turnaround, like minus 80 to up 55, and then you'll start to see something very impressive. So that's kind of what you would want to see. So let me do this again. The S&P, I'll do this on a technical basis. This is Monday. We've got the whole week to go. Let's just take a little time here. The fact that we made this inverted, this Eiffel Tower, uppercase A, straight up and straight down, gives you an A minus because it failed, goes to a lower low. It's exactly the same thing in the S&P. The histogram was improving a little bit. There was a chance that you could start to make some kind of a rebound. Makes between today, right now, as we're talking at 10:20 a.m., and tomorrow at this time, really important. And we'll talk about the reasons why it's important, because there was, in fact, remember I was talking about the Dow with the arch formation. Well, look at the S&P, how beautifully this did to the vertical line. This is that I call it the plumb line at 46.3730 on the 29th of March, from the low of the 24th of February at 4114.65. You had the equal number of bars going to the upside to an equal number of bars to the exact day on the downside. And then there was the big spike, and now we've gone to a lower low. You've set off, in fact, an inverted cup and handle, with the handle starting to really pull back. So I'm looking at this again to say the MACD is very poor. The stochastic is 23%. It's good. but I don't want to see it have room to go down to the 15% level at this particular time. So this is a really important 2-day session, 2 days of trading, because this is where even the weekly chart says you went to a lower low. If you were going to turn around, it has to start really soon, just really soon. And the other thing is, when I'm looking at this, when I look at the QQQ, look at the difference. It took out that left side low of 317.45. There was a trend line support. It took it out about just over a week ago. Then it bounced nicely just over the 14-period moving average, the black line in the daily, and then it plummeted down. And look what's happened. It's gone to a lower low in the daily. The weekly chart, the technicals, now the technicals at 8% in the stochastic on balance volume, extremely oversold. And remember, that's the only one I talk about being oversold and overbought. I don't talk about the MACD or the stochastics because there are other things that I look at there. But on balance volume, I do. And in this particular case, yes. But if you look at the monthly chart, we've had successively lower lows for this is the 4th month since the high of 408.71. And it just says to me, leadership is imperative. And I don't want to take too much time here because there's a lot to talk about. I want to talk about leadership. So you're looking at the IWM, much lower low. It's been one of the weaker indices. This actually, well, I don't want to talk about it. You have to wait for the whole month of May to talk about the monthly chart as a sell signal to sell mode. I don't want to go there just yet. And now let's just go to gold. I want to do this again. Look, the GDX now is underneath the 200-period moving average. I've been talking about that for about a week now. I've been saying, it looks to me, based on the GDX, which is the gold miners, that gap has to be filled and quickly, and it hasn't. This is the gap that was in the 36s from about the around about the 22nd or so of April. And now what we've done is we've gone to a leg C to the downside. And that's just saying to me that in the context of the overall market, leadership has been, I'm going to get to that in a moment, just let me finish with the goals. And so I'm going to go to the XLP, which is even though this is midweek, not midweek, we're just starting, this is now a sell signal and probably a sell mode in gold on the short term. That doesn't mean to say you can't turn around the next day or two, but this is a designation that it's getting right now based on last week's action on the Friday close and the start of trading this week. It's in a sell signal in the daily, sell mode in the daily, sell signal in the weekly, and the monthly chart is still struggling. It hasn't been able to hold the downtrend resistance, and this is the GDX. Now, people have asked, where are all these different indices going? Do you know? And all I can say is, I like to look at all the different sectors in phases. I don't want to give you a number now and say, oh, I'm thinking the Dow's going, then give a number. Things can change. I might find that that number is too low, too high, too whatever, and people get stuck on the number. I'd rather say the trend, for me, the trend has been down. The tide has turned. In most of the markets, the tide has turned in all the key indices. The tide has turned in the gold. Look at silver. Silver, the same thing. Silver is now down big. It's down 2.3%. It's down 53 cents at 21.840. I've been saying this is out of the two of them, silver has the weaker indice pattern. And the high-grade copper was starting to fail. Now it's already failing. And it's down 4.6. It's at 416, down 10 cents. And that's a peak D in the weekly chart, which says you're in a sell mode. But it's still a peak C in the monthly chart, but acting very poorly. Looking at, I did that. Let's look at wood. I'll just do it as an index. Sitting on the 200-period exponential moving average, was holding very well. This is the iShares Global and Timber and Forestry ETF. Now this allows me to go to the dollar, which we've been long for years, trading at 103.81, up 15 cents. This particular rectangle formation here says, hey, good action fantastic action in the dollar, but let's watch this very closely. Why? Because if it continues to hold and just make a rectangle formation between the 102.40 level and slightly higher highs going to the 104s, that's going to continue to put pressure in gold. That's going to continue to put pressure in different areas. And we used to look at the. I didn't do it Friday, and I didn't do it today. I haven't done it today. I wanted to talk about the Dolly, VIXI, Bondy, Oily, and Goldie. And what we're looking at here is that crude oil, and I discussed this on Friday. I discussed it in greater detail with my subscribers in my overview video on Saturday. And I said, it seems to me that the commodities are going to have some kind of a digestive phase right now. Some are going to be more than digestive, but at least a digestive phase. And that's going to allow some kind of transition over the next few days where a lot of, I'm not going to say investors, I'm going to say a lot of fund managers are going to start looking at this and say, you know, I'm beginning to see value. And that's what I want to talk about just in a moment. I just wanted to do this for the moment and say TLP is down 92 at 112.75. The left side, right side, when I get back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, just running through all the different questions I've got here, and I'm going to get there right now. Yes, here we go. So let's start off with the number one question, and it pertains to exactly what I was talking about. So I'm talking about how we've rotated through the different sectors. And what I'd said is now I think that like the DBA, which we are still long, is down sharply today, down at 2150. It had a high just recently of 22, I think that was 90 or something. 2288, I should have put that in. We're along from 1377. I'm holding this. We're taking just a little bits off. And we'll be looking at this as a new buy at some point, but not right now. Why? Because I think that the whole agricultural sector, the whole oil sector, look, here's a question about Halliburton. No, I don't mean Hell. I mean Halliburton, H-A-L. And look at this. Hell, trading at 35.18, down 217. Made a peak G. Halliburton Company, oil service, a leg F in the week in the monthly chart, peak E in the weekly. Question about Mosaic, the Mosaic Company, which is phosphates, I believe. Yep, potash, phosphates, fertilizers. Peak F with a little silent Chapman wave, silent doji at the top, going from the 78, 79 area, trading at 59 right now. And I've held off. I've said, got to be very careful. Valet. This is what I'm saying, that the market, why we're extremely oversold. You can keep going oversold. That's not the point. Remember, I said Valet made this left side, right side vertical test back around about the 7th of May at 20.96. This is iron ore pellets, nickel, copper, ferrum alloys, etc. And then pulled back and then made a retest just above, just in like 21s. And I said that was much weaker technically than it had been previous to that. And now we've gone from the 20 level, 2021 level to 14.98. And I've been making a big deal about have patience. These are areas that you might want to get into. But at this particular stage, that's what I'm talking about. Look at the XLP. This is the defensive area. This is S&P Select Staples, Spider Fund. Makes a peak F at 81.34 in the Chapman wave methodology, around about the 19th or so of April, and now it's trading at 76.68. And that's the reason why I said I want us to focus now intensely on the bonds. And that says you've got, if I can do it here, I'm doing it on the bonds. I should use the TLT, but this is the real thing. So look at this pattern here. The bonds have gone from 192 and 22.30 seconds. Now, this is a continuous contract, so that price could be smoothed out. Yep, it is. It's 185 and 2.30 seconds. So I'll change that, but nothing else changes except the price because it gets smoothed out. What did I say? 3 seconds, 3:30 seconds. I can't remember. 3:22s. Okay. Look where we are. We're at 136. Well, the most important low that was made was this cluster formation, and it was just a halfway marker basically. And then it went even higher, and that's that whole area between the week of the 4th of January 2019 at 138.5. And it can come down to a little bit low, which is 134. So where are we right now? We've traded today at 134 and 30 seconds. And in this left side, right side price time match that I used, and the plumb line is not the perfect one. It's right here at that retracement of the 7th of August to 176. The high which was made at 105 was the week of the 16th of March. But this is it. This is a little doji candle. We've got we're an hour into the first hour of this week's trading. So far, it's a doji candle. The MACD, the histogram's flattening out a little bit, but the price is coming down. Stochastic is flat at 6%. There's no energy right now. And the on-balance volume isn't yet oversold. So this is going to be an important phase because it's saying, if you're looking at yields, there's no question based on the TBT that in leg E in the weekly chart, having broken above the W formation resistance on the way to the high that was made at 27.72 the week of the 8th of November, and we're already at 27.73. We're 4 pennies away from that. So the MACD is good, stochastic is really good at 96.92, but the on-balance volume is saying to me we're getting really close to some kind of a balance. And that balance, I think, together with crude oil coming down, with so many other factors, says that we could be very close both on an emotional level, based on the VIX index, based on the XLP, the staples index, which all money was flowing into. And I'll get to KHC in a moment. Great question. I did work on this over the weekend. In fact, for my subscribers, to my opening call this morning, in the headline, I focused on, I gave a list, and I'll go through some of them right now. And KHC was there. So this is just saying that on an emotional level, there is so much intense selling that we're almost throwing the baby out with the bathwater, and that can go on for a long time. And bear markets, that just goes on for a long time. But on a very short-term basis, we've got to be prepared that if there's any good news right now, there are enough stocks that could have good percentage gains, and I'm upset because one of the stocks that I wanted to buy, I had it all written up, both the Dow and this particular stock written up, and I said no, just give yourself a break, step back, let's see what market does today, and the stock that I wanted is actually up from the entry price I would have had, but that's okay because it means that at least I think I'm on a right track, right? Now, let's look at this. Based on the volatility index, there is no news that's coming out right now that isn't known. There's no unknowns. No, there isn't unknown. Everything's known. We know that yields are going higher. We know that inflation has been a bugbear. It's just been there and sitting steadily. There is nothing here that you can really feel hopeful about saying, oh, this is the end, this is the big bit. Even if today was unless it was a crash day where you just wipe out everything and you restart over fresh, we're not doing that. Every time we get these huge VIX index rallies and the market at some point suddenly turns around and goes up, it says it's just, remember, earthquake and aftershock. It's just one of the aftershocks. If you want to trade it, that's fine. I've said to subscribers, there's no harm in sitting there with this huge cash position we've got. Cash is king. But for traders, we're always having trades come up, and we can take that. That's one thing. I'm in the process now of doing an assessment that says, what am I looking at longer term? And I'll just quickly answer the question here that says, surely this is the ideal time to be putting some money to work. And this person is really looking at a bigger picture. And I'm saying, no, not yet. Not in the longer term. On a short-term trading basis, yes. In the long term, I still think, remember I said, keep taking some of that money out, put it aside because you never know when you'll need it. And now let me show you something. So KHC, this is, I typed in the wrong place, KHC is in fact Kraft Heinz, and it's doing really well. Almost had it as a buy today because of this falling exclamation breakout. And look how it is at 44.37, up 77 cents.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So I want you to, this theme is really important, at least for me. So Kraft Heinz, snacks, condiments, you would expect that at some point they're going to have to raise prices. But, for snacks and condiments, it's kind of because you're not talking about an automobile, you're talking about dollars and fairly low dollars. I think for a little while, people will continue. I said this about 3 weeks ago. I said, as far as inflation is concerned, when it comes to condiments, things like that, not necessarily when it comes to, say, a steak or something like that. I think people go a little longer. I see the same thing about cosmetics. I think that people go a little longer buying because it's something that they feel they need. And then there's a certain point where I say, I'm done. I'm finding something else. So look at this cup formation in KHC, which is Kraft Heinz company, trading at 44.47, up 88. And I did my work on this over the weekend, and I thought, wow, that is really nice. And this is not the one that I was going to go into. The one I was going to go into was because I thought that this particular stock would be an indication of whether the tech sector had any veracity at this particular point, because it had held so well. But this is different. This is in the food area. So it's holding. This is Kraft Heinz doing beautifully. So what I'm saying is that the XLP, because it's a little more generic in the sense that it has. Oh, I typed it over there. I wondered where that went to. It has Procter & Gamble, I believe. Look, it has Procter & Gamble, which is now digesting huge gains, going from the 140s to the 160s, and now it's down to the 155 area. So because of the rotation through there, now specific stocks in this whole defensive, not Raytheon, RTX, which has had a big pullback from the high that was made at about 106 just 3 weeks ago. That's different. But this is, in fact, in the defensive area. And therefore, I think you can stick with this area very selectively now. That's the defensive area, like a Heinz. The other thing I was looking at here is a question came in, the TLT. Are you saying that this TLT right now is ready for a pretty decent bounce? And basically what I'm saying is that at 113.23, the on-balance volume, the chart formations that I'm looking at, the left side, right side price time match. Oh, I didn't do that. I did that on the bonds. Here's the TLT. So I did some work over the weekend. This is what I believe I showed subscribers in my overview. I did so much stuff. I can't remember now who I showed it to. The time match that I showed, yes, I did this. So 179.70 was the high in the TLT the week of the 13th of March. it pulls back sharply, and the rectangle formation this time produced a lowercase h. They went to a lowercase m and then failed and went 1-to-1 to the downside to the 133.19 area from 172s, and then it went back to the 152.72 level, and it had a 155 high, and the left side was not anywhere as strong as the right side, but I drew in three things. I drew in a left side, right side price time match to the low that was made at 133.19 the week of the 19th of March as a weekly chart, to the trough, that little trough B back in October. And then I drew in the Chapman wave inside wedge target support line, which came in to last week or this week right here at this particular moment. And I showed the beautiful time match of the high that was made. I should type this in because it's getting ridiculous. 16th, I said, 13th. 13th of March, from the 13th of March high. Let's go there, 3, 13, 20, 20. All right. From that high to the low that was made here in the 12th of March area. That was 2021, I believe. Yep. Oh, did I type in 2022? How silly is that? 2020. Yeah, and then look what happened. We've got an exact time sequence, not a price, because this is just time, that I'm using in the big picture. And we went to the same level, and it held, and then it broke down. And that breakdown was on the 18th of March, every single March. Look at this. Breaks down, and what does it do? It plummets down, and it goes to another left side, right side time match, and it goes to, this is 1 week late, 1 bar late. So it says there are enough pieces of the puzzle to say we don't have to make the low right now, but we could be making just enough of a bounce so that the commodities pull back, crude oil pulls back, just allowing some kind of pace to the upside. It hasn't helped the OIH yet. If you're looking at the weekly chart, made a PEG, it's pulled back, but there are. So if you're looking at it on a short-term basis, you've got your dreaded H pattern, meaning that if the oil service OIH pulls back, and it's funny that you're talking about a pullback here at the same time as other commodities, and that should allow the IYT, which is the transportation index, to try to find some kind of support. We'll see, because that includes jets, that includes the airlines, which are really tanking right now, down 82 cents at 19.59, down 4%. So this is a very complex market. And what I'm saying is that I think we have enough pieces of the puzzle to allow some kind of a relief rally to unfold, but it's got to be led, and you've got to see some leadership, and it's got to be in areas that see former winners start to pull back. That would include the defensive XLP. That would include the USO, which is the oil, there we go, USO, which would include USO to start to pull back at the United States Oil Fund. Doesn't have to break down, just to pull back, to have a little bit of a relief. And that says, still treated as a counter-trend rally. And there's a reason for that, because in the big picture, the monthly charts are still, and that's the reason why I answered the question, is this the time to be putting money to work? And I think the question is, the implicit projection here is that we've made some kind of a low and there should be higher highs to come. No, I don't think we're done. I think there's a lot more to unfold, and this peak B in the S&P could still see, look, you've got, if I had to just draw this trend line that was a breakout level, now treated as a support level, that takes you to around about 39.49, and the S&P on the weekly chart as the next key support level in that area. So no, I don't think so. I think this is still a time to have a good bit of cash ready. But on a trading basis, I think that I think we're real close to something that will resemble a kind of, not a takeoff pattern that says that's the end of the move, but a really decent percentage gain. A question about Microsoft, yeah, that's what I'm looking at, the latter. The ones that are the longest to take a dive and made high highs, these are still somewhat vulnerable. That includes Microsoft and Apple. Not that they couldn't have decent bounces, but I don't think they're quite ready for the big move. So that's it. I'll be back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back. So Basil Chapman here. This is wrapping up my Tiger Technicians Hour. And the question came about Sting, which is Scorpio Tankers. It's down at 24.38, down 2.34, down 8%. Yeah, give this a little time. Let's see how it can hold the 22.30, maybe 21.80 level. I think it's pulling back. There's a reason for it. It is a peak C in the weekly chart if there's no new recovery high this week. It's in the areas that I'd be looking at, but NAT, which is Nordic American Tanker, I think the shippers right now, this particular week's going to be a tough week for them. And now let's just go through these things. What would I expect at the end of the day if there isn't a turnaround? What would I expect if there is a turnaround? The VIX index is 34.16. If the selling pressure is maintained, and I believe that this is institutions buying some protection as well as the general public, you would need to see for the market to go back to a minus 600 and something or minus 800 on the day. You would have to see the VIX index holding after 2:30 this afternoon into 320, holding strongly it's at 34.33 in the 34.70, 35.20 area. If it holds there, I don't see how the market can make a sudden reversal. The sudden reversal will come if all the selling pressure gets out of the way within the next hour, say by the time Larry's show is finished. Don't forget Larry's webinar coming up a week from tomorrow. Should be, as always, a fantastic one. What I'd be looking at is the Dow suddenly is only down minus 220 at 2:20 in the afternoon. 220 at 2:20, and the volatility index is no more in the 34s, but it's at 33.50, 33.20, 33. And then you'll say, oh, okay, finally we've got something that says next few days it could be a really good bounce. Wednesday, the Fed comes out again, so it might be only until Fed speak. But in the meantime, I'm not being overly optimistic, but I am saying that there are enough signs to say this is a very emotional moment right now. Some of the technicals are not concurring. And there's a chance that you could get this flurry of activity later in the day or early tomorrow that says, oh, phew, relief rally. But you have to think of it at first as a relief rally and then see how broad it is. How do some of the stocks like the ones in the ARKK fund